You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 7th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is private. That's for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, there's a link. It says 5-day free trial. No credit card required. All you have to do is click that link and then fill out the registration form. Now, it's only going to take you a couple minutes at most, but it's important that you fill out everything, fill it out properly, because it's an automated process. And if you don't fill it out properly and we don't get it, we don't even know you want to take a free trial. So just take a minute, fill things out properly, and then what will typically happen is same day, we'll be in touch, we'll get your desktop set up, get your indicators indicating, then your trial will start officially the following day. That would be tomorrow. Now you say, well, gee, it's already Tuesday, I better wait till next Monday. No, you get 5 consecutive trading days, even if it stretches over a weekend. So effectively, you turn a 5-day trial into a 7-day trial. Because yes, there are some markets that trade over the weekend. They never sleep. So again, mytradingiq.com, top of the page, 5-day free trial, no credit card required. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. This broadcast is open to everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, fill out that 30-second registration form, and you're done. Going forward, what will happen, every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. And you'll avoid that, 10 to 15 second lag that you get when you tune in via our YouTube channel, which is the other way you can join this afternoon broadcast. There will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy and you can't join live, but you want to get caught up later. You can do both via our YouTube channel. Easy to remember, youtube.com/CFRN. You've already got the YouTube part memorized, so All you have to remember is the CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,500 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Now, on the YouTube channel, there is a chat box there as well. And I start monitoring that chat box about 12:45, 12:50 when Michael shows up to give us a recap of what happened in the live training room this morning. After that, we'll go live on the TradingView platform for about a half hour, do some live trading. Then we'll wrap things up with our good word for the day. Before we start wrapping things up, let's get going with our daily devotional and a word of prayer, as we do each and every day. And today we're starting a new topic. What is God doing? You ever wonder that? I have. Today's scripture is 1 Kings 19, verses 11 through 12. And I'm going to share it with you from the Message translation. Then he was told, "Go stand on the mountain at attention before God. God will pass by." A hurricane wind ripped through the mountains and shattered the rocks before God. But God wasn't found in the wind. After the wind was an earthquake. God wasn't in the earthquake. And after the earthquake, there was fire. But God wasn't in the fire. And after the fire, a gentle and quiet whisper. Yeah, that's where God was. Not in the earthquake, not in the hurricane, not in the fire, but in that quiet whisper. Listening's important, especially when you're dealing with God. Now, the concept of listening to God, it can be confusing. If you look through the Bible, you see a few isolated examples of God showing up and speaking through impossible to miss supernatural means. A burning bush, a thunderous voice, even a talking donkey. While I think we'd all love for God to be this obvious when he speaks to us, it's actually a pretty rare occurrence throughout history. More often, we see God speaking much softer and much more subtly. A perfect example is the story we're about to read. The Old Testament prophet Elijah was at the end of his rope, tired, fed up, ready to quit. So God came to have a conversation with him. And while Elijah is hiding out in a cave in the middle of nowhere, this crazy series of events unfolds. From inside the cave, Elijah witnesses all sorts of natural disasters. The wilderness is being ripped apart. We talked about it, right? Hurricane, earthquake, fire. Think of all the natural disasters that you may not have been a part of, but have heard of, and maybe even experienced in your own lifetime. Oklahoma, last night, as one example. But God wasn't in any of that, as we read in the scripture. So Elijah, he's in the cave, he's watching all of this stuff happen. He's got a front row seat to it. And then he hears the sound of a gentle whisper. And that's when he steps outside, ready to hear from God. If I were Elijah in that cave and I knew God was coming to speak with me, I would probably have expected him in the big and obvious. When fires and earthquakes are raging all around me, I'd think, there's the all-powerful creator of the universe. God prefers to speak to us in whispers. He's gentle with us. More than that, we now live with the advantage of having God Himself as the Holy Spirit living within us. We can hear from God because He's already right there, closer than we realize. But here's the problem. If God speaks in whispers, we're going to have to get quiet if we expect to hear Him. Could you hear a whisper over the constant music in your earbuds? The insane schedule you keep? Or the constant barrage of screens in front of you? When's the last time you slowed down, got quiet, and really listened for that gentle whisper of God? I hope you'll read that scripture again. Then just take a couple minutes to be quiet, to listen. I really encourage you. Give it a try. Join me in a word of prayer. Heavenly Father, as we come before you today, we thank you for your presence. It speaks to us in the quiet moments of our lives. Like Elijah, we often find ourselves facing storms and struggles that threaten to overwhelm us. Yet, in the midst of the chaos, you speak to us in a gentle whisper, bringing comfort, guidance, and assurance. Lord, help us to quiet our hearts and minds so that we may hear your voice speaking to us. Grant us the discernment to recognize your presence and the courage to follow your leading, even when the path ahead seems uncertain. In moments of doubt and fear, may your gentle whisper reassure us of your unfailing love and faithfulness. Help us to trust in your plans and your purpose for our lives, knowing that you are always with us, guiding us every step of the way. Lord, we pray for your wisdom and guidance as we navigate the challenges and uncertainties of life. May your Spirit empower us to walk in obedience to your will and fulfill the purposes you have for us. Thank you, Lord, for your constant presence and your unending love. May we always be attentive to your voice, listening to your gentle whisper in the midst of life storms. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Tuesday. TikTok sues the U.S. government. Says the ban violates the First Amendment. That just popped up on my news feed. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 51 points. The Nasdaq's up 41. S&P 500 is up 15. The Russell 2000 is up 16. And that's the closest we have to a mover shaker in that bunch. Not quite 1%, but head and shoulders above the rest of the bunch. In the commodity basket, crude oil up 32 cents, trading $78.80 last. Gold down $9.60, trading $23.21.60 last. Silver down 9 cents, trading $27.52 last. Now, after the huge day silver had yesterday, it's not surprising that we would see a retracement or a pullback. Got to get ready for that next leg up. In the Asian markets at the close, the Nikkei posted a gain of 599 points, 1.5%. Shanghai rose 7 points. The Hang Seng dropped 98. And in the European markets at the close, FTSE gained 100 points, 1.25%. The DAX rose 254 points, 1.5%. And the CAC gained 79, 1%. This is the biggest day we've seen in the UK for quite some time. So we had a mixed day in Asia. It was definitely a green day for the UK. And so far, it's a green Radio Tuesday here in the US of A. But it's not a big green Tuesday, but it is undeniably green at the moment. I mean, take the Dow, for example. It's up 45 points. Okay? Not a lot. It only takes 20 points to get your goal for the day. But basically, what I'm saying is we've had some pretty quiet, sideways, uneventful markets here in the U.S. so far today. Now, that may be because we're approaching a very important inflection point, which I'll show you here in just a moment on the daily chart. We all grew up with the wonderful world of Disney. But Disney said today an important part of its streaming business turned a profit for the first time, but that it expects weaker results in that segment for the current quarter, sending its stock down nearly 10% today in early trading. It's down a little over 10% right now. The forecast highlights Disney's challenges in achieving sustained profitability in streaming, a key priority as its linear TV business declines. Now, when we were kids, all we had was The Wonderful World of Disney, which came on Sunday night at 8 p.m. Eastern. Now, you can watch anything Disney ever did, anytime. You can find it streaming somewhere, probably on the Disney Channel and other places. It's like The Wizard of Oz, which that wasn't a Disney product, but at least I don't think it was. But that was an annual event, and you had to be there when it started, or you would miss it. There was no VCRs to record it. You couldn't stream it later on Peacock or whatever. I mean, it was a once-a-year event. It was a big deal, and if you were a kid, wow, you were there. Until you got too old for that kid stuff. But when you were a kid, it was a big deal. So, things at Disney, they've already destroyed the Star Wars franchise. So, the company said it expects DTC results in the entertainment segment to be in the red in the third quarter, driven by losses from its Indian brand, Disney Plus Hotstar. Additionally, not all of Disney's streaming services were profitable in Q2, including ESPN Plus. Total direct-to-consumer losses amounted to $18 million versus the $659 million loss reported in the year earlier period. Disney does expect full streaming profitability by the fourth quarter of this year. And this is a company that's been around since we were kids. That's a long time. Now, most of you know who David Einhorn is. Big fund manager. He put it bluntly today on Bloomberg. The valuation be damned boom in passive investing has fundamentally broken markets as it proceeds to crush the time-honored hunt for cheap-looking stocks across Wall Street, year after year. In the telling of the renowned hedge fund manager, the explosion in index tracking flows is putting so many active investors out of business that the halcyon era of Warren Buffett and Benjamin Graham championing undervalued companies is no more. And that undermines everything from price discovery to corporate governance. Passive investors have no opinion about value, Einhorn said. The Greenlight Capital founders' views come in an era when cheap stocks have lagged their tech-heavy growth companies like never before. Just as passive assets overtake active counterparts. After 2 banner years for his fund, Einhorn's views constitute a critique rather than a lament, given his bullish takeaway that there's still a way to make deep value investing work. Yet, it's reviving the broader debate on the market disruption brought by big passive frenzy, once dubbed worse than Marxism. But has the backlash gone too far? Perhaps. Here's why a slew of pros argue the indexing boom, far from breaking things, is exerting a still modest impact on the stock picking backdrop, citing broadly business as usual data on valuation and equity returns. He goes on to talk about vanishing value, active control, pools of bargains that nobody's buying, and the gap between the Magnificent Seven and the also ran. It's huge. So his point is, even though he's had 2 better years because he knew to ride the backs of the Magnificent Seven, but I think he's taking his cards off the table because he doesn't like what he sees. Now, this should be of interest to all of you options traders. Buying options to protect against a stock market plunge is the cheapest in 9 years. Yeah, 9 years. As the CBOE Volatility Index, or the VIX as we call it, which measures expected swings in equity markets, sank over the past couple weeks, so did an index tracking the implied volatility of VIX options, known as the VVIX or the VVIX. The VVIX finished yesterday's session just above 73, its lowest closing value since May of 2015. Early in today's session, the index advanced only slightly, holding well below its 1-year average of 89. The lower the implied volatility, the cheaper the options. So the drop in the VVIX shows traders aren't spending money on VIX call options, often used as insurance against a major stock sell-off, given the VIX tends to spike when the S&P 500 slides. The S&P 500 index was little changed in early trading, and still, we'll look at the chart in just a second. After surging over the past couple of weeks amid strong corporate results and signs of a cooling labor market, which raises hopes. See, we have to see people put out of work. For the Fed, we're hoping people will, this is sick, we're hoping people will lose their jobs so that the Fed will cut interest rates this year. Come on. That's how the market thinks, or the market participants, or the deep pockets. They don't care if the little guy loses his job, as long as they can get money cheap. The VVIX has rarely spent much time below the 80 level, according to the co-head of derivative strategy at Susquehanna International. The VVIX closed below 76, prompting a VIX call buyer to snap up 250,000 contracts and bump up VVIX alongside it. While we aren't predicting a similar outcome this time, we would also not be surprised to see opportunistic hedgers come in to take advantage of the low VIX and VVIX setup through call purchases. Now, I'm not recommending you go out and buy options. I'm not an options guy. Those of you who are, it is probably something you should take a look at. Okay. Let's look at Logic 247. Quiet week, but not a bad week. We are in week 301, and over the last 301 weeks, we've issued over 16,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 15 alerts. Not a lot. We're still waiting on the outcome of 2. So that's 13 actionable alerts, of which 1 or 8% would have been stopped out, again based on market structure. And that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. So a good week, but a quiet week. Now, long before we had Logic 247, that's 301 weeks ago when we started after the beta tests, and concierge trade alerts go back probably 600 weeks. God, that's a long time. Now, they're different than the logic alerts. The logic alerts can come out anytime around the clock, 24/7, 2 a.m., 2 p.m., doesn't matter. Futures trade around the clock, and we have traders around the globe. Their day session is our night session, and vice versa. Now, the purpose of the alerts is to help you learn how to trade. It's not just a shortcut so you don't have to learn how to trade. Use it as the educational tool it's intended to be. The logic alerts, you get an entry price, an initial target, and then quite often a second, third, fourth, or even more targets, and a final trade to target. In the beginning, what you should do is every time a logic alert comes out, go to the 30-minute chart of that market, whether you trade it or not. Draw a horizontal line at the entry price. Draw a horizontal line at the initial target. Right there, there's your goal for the day. Then draw horizontal lines at the additional targets all the way up to the weekly zone above, or if it's a short, the weekly zone below. Study that. Each time you go from the entry, the initial target, that's a window of opportunity. Then as you go from that target to the next target, that's a window of opportunity. And as you go from that target to the next target, that's a window of opportunity. All the way up till you get to the zone above if it's long, or the zone below if it's a short. Now with the CTAs, first you start with the logic and then use the CTAs. Okay? And implement what you learned doing that legwork that I just explained with the logic alerts. The CTAs don't come out around the clock. They're published as a static report shortly after the Globex Open each evening. So today's the Tuesday session, but it began last night, Monday night, at 6 p.m. Eastern. At 6:10, I published all of these targets for our members and trial members. When the report comes out, the first thing you should do is make a note of where price is or was at the time the report was published. It's always going to be between these two numbers. Cover the same markets with the CTAs as we do with logic. Then draw a line in the sand at the long target, draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, with the CTAs, this is where you start looking left yourself to spot potential obstacles to the trade. If it's a long alert or a long trade, you're going to be looking left to spot previous swing highs, which can become current resistance. Or if it's a short, if you're moving towards the short target, you're going to be looking left for previous swing lows, which can become current support. Now, BBC just stands for bull bear cross. When price crosses above the green line you'll see on my charts, then we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Now the VVC, you can put it on any time frame. You'll see it on my 30-minute chart, on my daily chart. Put it on a 5-minute chart, tick chart, range chart. It's always relative to whatever time frame you're looking at. Prices above the BVC, expect higher prices. Prices below the BVC, expect lower prices. Also, you're going to learn over time how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the zone overhead. Price is below the 30-minute BBC, it's trying to get to the zone below. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, this is how you figure out which way the wind is blowing. Okay? This is the daily chart of the S&P. But you might trade something different, another futures market, individual stocks, crypto, Forex, ETF, doesn't matter. What I'm encouraging you to do is to spend 2 minutes with the daily chart before you drop to your smaller time frames to actually start putting on and taking off trades. You see, institutional traders, they're the ones who actually move price. It has to do with account size. These institutions have accounts in the hundreds of millions, billions, even trillions of dollars. So they trade in huge size, and that moves price. So our strategy isn't designed to outsmart the institutions with their infinite resources, but to help you see and understand what they're doing and why, what they're trying to achieve, what their goal is at any moment in time, so that you can just simply do the same thing long enough to get your goal for the day. Now, we started talking about this potential when red and falling turned to blue and climbing. We've now traded above the BBC. We've traded above the 62% fib extension. And as we talked about yesterday, and as I posted in the discussion group, right here we got a bearish cross. Now we know from years of history that when we have a bearish cross, red line gets below the green line. It's kind of like when the blue line gets above the green line, that's a bullish cross. The green line is the BBC, bull bear cross. Bullish above it, bearish below it. Price always reverts to the mean. In our case, the mean is green, and it's called the BBC, bull bear cross. So, we crossed, we got our leg, we retraced, then we ran into support. We not only got above the BBC, we broke the trend line, we got above the 62% fib extension, and we're about to find out if it's all a big head fake. It was right there. About 52.31 to 52.35. That area, okay, is where the bearish cross took place. And when you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Is it always good resistance? No. There's very few always in the world of trading, but more often than not. So the point is, if you'll spend 2 minutes with the daily chart of whatever it is you do trade, it will help you identify these important areas. See, on your 30-minute chart or your tick chart or range chart or whatever other smaller time frame you use, you would not know that this huge potential for resistance looms overhead. Now, could price trade right through it? Yeah, it could. Based on a lot of years of history, it's most likely to find some resistance there. Will it be enough resistance to send it back below the BBC? That I don't know. That's why we simply trade what's in front of us. But we want to be aware of what's happening in the big picture. Now, Michael should be joining us here momentarily, so we'll jump into the 30-minute charts where all the alerts are created. Okay, and these are this week's zones. And this was last night's open right here, this candle. 10 minutes into the life of that candle is when the CTA targets were published. The vertical line separates today, Tuesday, from Monday. And then if you go back over here, it's Friday and then Thursday and whatever. But the new weekly zones come out Monday morning at 6:15 a.m. Eastern. Okay. Now, as you can see, as we came up to this zone yesterday, we consolidated for hours. The zone's 5182/83. 70% of the time when price encounters a weekly trading zone, you're going to get this consolidation. Here it is again. 20% of the time rejection, 10% of the time slice. So we opened last night and we just consolidate and then we move higher, but we hit red and falling. Blue and climbing, red and falling. The official name is CFMA1. I just call it blue and climbing, red and falling. One is bullish, the other bearish. And red and falling pushed us down to the zone, which we expect to be support till proven otherwise. And the pullback to the BBC holds more often than not. As you can see, it did yesterday. Okay, and here. Now, this is all the movement we have for the day. Not a lot. And that 52.31 area we were just looking at on the daily chart, it's up here. It looks like we may have a tough time getting to that unless buyers come in and spark something. Because what's happening right now is the step line is crossing blue and climbing, which means a retracement back to the BBC. Again, the pullback holds more often than not. Of the 16,600 alerts in the Logic 247 channel, every one of them is a trend trade as defined by the 30-minute chart. So to short back to the BBC would be a counter trend trade. Nothing at all wrong with counter trend trades. But trend trades do have a higher probability, low risk characteristic. So I suggest learning to trade with the trend. In other words, swim downstream before you start trying to swim upstream. It's just simpler, okay? Kind of got the wind at your back. But the step line's crossing, price is coming back to the BBC. If it holds more often than it doesn't. There's once, twice, 3 times. If it holds again, that may be what we need to get us up to that bearish cross on the daily chart. On the Dow, we opened last night right at the weekly zone, just like on the ES, and we just struggled sideways, reached up and capped the long target, pulled back to the BBC and the zone, hit the target again, got a leg, then a retracement to the BBC, which held, then a leg and a retracement, and a leg and a retracement. Now notice the step line is already crossed blue and climbing on the Dow, and we've got a red candle printing below the BBC. So we're going to short that right away. Well, look left. You've got potential support right here at these lows. And then bang, you're at the zone. 90/95. 38,990/995. So, and then once you get below the zone, you've got this bullish cross. See, when you have flat markets like this, it makes for difficult trading. But did we hit the long target? We did. On the Russell, here's where we open. Pull back to the BBC. As we pulled back, we reached down to the zone, which we expect to be support until proven otherwise. Pullback held, so we get a leg, retracement, pullback holds, leg and a retracement, pullback holds, and it holds. And we almost made it to the next zone at 2092, and we could still make it, but look at what's happening. The step line is starting to hook right. And once it crosses blue and climbing, we're most likely to get a retracement back to BBC. Then we have to see if it's going to hold or not. Is it going to give us a leg to the upside, or are we going to work this little area to the downside? Michael's here, so he will take the screens and give us a recap of what happened in the live training room today. Then we'll go live on TradingView for a half hour. And then we'll complete this recap and wrap things up with our good word for the day.
All right. Here we go. You should be looking at my charts now.
Yep, looks good.
Good. All right. So here we go. Good afternoon, everyone. Today is Tuesday. Today is Tuesday, the 7th day of May, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. That is going to bring you to this page. On this page, all that we ask for is your name, your email, your phone number, all that stuff in there. Your name, your email, your phone number, and down here at the bottom, if you have an NinjaTrader, give us your machine ID. If you have TradingView, give us your TradingView login ID right there. Okay, once you do that, then we'll set you up so you can get your indicators indicating as quickly as possible. It's good to have them going before you get into the trial, all right? Once we do that, you can go to trading platforms here and just follow the instructions on the different platforms. All right, NinjaTrader is down here at the bottom, TradingView is right there in the middle, and DT Pro is right here at the top. Okay, do all that stuff. Now, we had a better day than yesterday, but still not a ton of trades today. I don't know. But we really, again, a very low news day. Even tomorrow is going to be a low news day. We have tomorrow, we just have crude inventories, I think is a big one tomorrow. Anyway, today, as I said, is the 7th day of May 2024. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We're up 20 on the NQ. We're -8 on the Russell. We're up 5 on the YM and up 2 on the ES. That put us at +110 on the morning session. Today it took 7 minutes and 2 trades to get to the goal for the day. At that point, we're up $2,550, and we took a total of 13 trades this morning. So on the month now, we're at $2,057. That's over 5 days, averaging $411 per morning session. On the year, that's with one contract. On the year, we're at $35,752. $792, $35,792, averaging $416 per day per morning session. Okay. So over here is the important stuff. If you were consistently profitable, doing everything like I did in the room, then so far this year, you would have, if you start out with one contract and you ended one per month, so far this year, you'd be trading 5 contracts right now. You would have averaged $1,024 per hour. Did it like I did and you started last January, right now you'd be averaging $5,676 per hour. Okay, you only had to work 32 hours so far this year, and it'd be averaging $5,676 per hour. Not too bad if you can get it. Look at, we're not midway through the year and we're already midway to the 7-figure. All right, so let's see the actual trades. All right, this is the YM right here, and we will see here on the YM. Let's go back to the very beginning. Okay, and here it is, very beginning. Wasn't that much going on the YM today. All right, on the YM, we started out with a break even here, and we picked up 5 on that, and then we had another break even right there, and I think that's all we did with the YM. We were looking for it to get up to this level at some point. I think it was over here. We were probably looking for that. I don't know where it was exactly. We were looking for that. It might have been right in here. We're looking for it to get up to that level. I think it was right there. That's what we're looking for, to get up to that level. And it did get to that level, and that level kind of held. During the break, we had some nice blue arrows right here. Well, this was actually just a little before the break. I was starting to break there. That would have been combined with that one right there. Then we had the purple arrow, the green arrow, blue arrow here. That one wouldn't work. That one would have stopped you out to the tick. This one also would have stopped you out to the tick. So there were a couple of tough blue arrows right there. Would have stopped you out to the tick. But we ended up with a +5 on the YM today. The Russell, we didn't have a whole lot going on the Russell today either. Started out with a stop out -10, and then we got 2 ticks profit there to bring us to -8, and we had a break even trade right there to bring us to break even. During the break, there was just a green arrow here and a purple arrow there. Again, the purple arrow is a ribbon trade most of the time, not all the time, but most of the time it's going to be a ribbon trade. All right. The times it won't be a ribbon trade is when the outer bands are really flat. But the black line's got to be in the right color for it to trigger, and the outer bands have to be the right color for it to trigger. So there will be times where you get a purple arrow when the outer bands are flat like this, but they're the right color. You see how that's blue right there? But it doesn't have any separation. So that's kind of the deal with the purple bands and the purple bars. Get into the ES. Now we had just 1 trade on the ES right here. We picked up 2 ticks on that one. Okay. And that was it. Oh, let me just go back one more time. Okay, now during the break, let's see, we had 1 purple arrow right there during the break. All right. All right, so the NQ is the next thing I'm going to look at here. Okay, the NQ is the next thing I'm going to look at. So as usual, we had more trades on the NQ than any other market. And so I'll just use the alt and back arrow to get back there today. Scroll a little further. Here we are. All right. So here was our first trade right here on the NQ. We picked up, that's where we got the goal for the day, actually, on our second trade of the day, but our first trade on the NQ, we picked up 36 profit on that trade. Then we had a break even there, and then we stopped out on that. Got us to +10. Right. Then we had another, I think we had another 30 tick trade there. Yeah, we did to get us to +40. Then we had a break even, and I'm pretty sure we didn't have much else until we got to the end of the session. You know, there are opportunities for trades in here, but just none that I took because I was doing the lesson plan. Right here, we did take this one that stopped us out, and that put us down to +20. All right, and then we get into the break, and right here during the break, there was one purple out here. Now this one right here was a valid ribbon trade. Okay, this purple was a valid ribbon trade, and it just barely put in a higher swing, making this a valid ribbon trade. Just barely put in a higher swing, making that a valid blue arrow trade. If you're just doing the blue arrow, it would have been from right here, and it's really close to break even or a stop out. I don't know if it went 8 ticks in profit. Depends what your entry was. But right here, this is what I was talking about the purple arrows sometimes giving you a trade where the outer bands are flat. Now there's one here, it was flat. And there's another thing that I'm going to do. I'm going to filter out with some of these purple arrows. That's why I haven't delivered the purple arrows to you guys yet, because still working on them a little bit, finding things that will help filter out some of the ones that don't work out so well. Like right here, where the black line's not going in favor of the trade. Right now, the slingshot has nothing to do with the purple arrow. But right here, we see the black line is not going up. It's not in favor of the trade. That's a problem. And if you go back and look at all those ones that are like that, I'm pretty sure all those ones that are like that have an issue. There aren't too many, but there's just a couple, and that's enough. Well, during the break, we had a green arrow there and a green arrow there, and this didn't put in a lower swing, so this purple arrow would not be a trade. You do have to have the lower swing and higher swing thing going with the purple arrow. If you go here to the mytradingiq.com and look at trade rules, for all trades on all platforms, all trades must come after a higher or lower swing, and they must be in long-term trend direction. Now, the purple arrow is obviously going to be a long-term trend because you have to have long and short-term trend to get a purple arrow. All right, so that is all of that stuff. Let me bump this like this, and it is now 13:01, so we can actually get into the live stream now. And let me bring that up over here on this monitor. So during the break, well, during the morning session, we actually got fiber optic connected to our house. So that is now the 4th network we have in the house. But we're getting rid of one. We're getting rid of Spectrum. And we're probably going to get rid of the other 2 too if the fiber optic one was good enough. But you know what I found is, I'll tell you in a second. Let me just type this in. So the fiber optic network, the upload speeds match the download speeds, which is significant. As long as the download speeds are good. But with what I'm running right here, I thought I had it up here a minute ago. I guess I didn't have it running there. What I'm running right here, do I have it on this one? I do not. Anyway, what I'm running right here, the download speed's 300 something, and the upload speed is about 20, which is enough to do really well with what I do. And that's not using the fiber optic. When I hook the fiber optic up, both the download and upload right here where this is located are like 80. Now, when you get a little closer to the, because the fiber optic still they have like a modem, and you get closer to the modem, they're both around 300, 350, depending on the computer you're at. And and if I hook my mesh network up to it, then they actually get a little better. They're up to like 400, 500 matching up, download and upload. So it's in other parts of the house, the fiber optic network works out. In this part of the house, though, I think I might just stick with what I got going here. It's working pretty good. Anyway, that's all my issues. Let's get into what we're looking at here. Now, if you have not taken a trial with us, right? If you haven't taken a trial with us, go here to mytradingiq.com, and right here, sign up for your free trial, and click on that purple button. There's no credit card required for the trial. Click on the purple button. It's going to bring you to this registration page where all we ask for is your name, your email, your phone number. Down here at the bottom, if you have TradingView, give us a TradingView login ID. We need that login ID to enable your indicators. If you have NinjaTrader, give us a machine ID. Okay, give us a machine ID if you have NinjaTrader. If you have both, give us both. All right, both works too. Okay, let me open this up and see in here. I don't see any questions happening in the live stream yet. All right, well, anybody that's watching in the live stream, if you do have any questions, just type them in. If you want to see any other symbols other than what we're looking at, just let me know, okay? So what we're watching here right now, on the YM, we want to see the YM. It's change directions right here. You can see right here, symmetrical. What's symmetrical? Like, what you can see right here is it's starting to change directions on us. It needs to move up just a little bit more, I think, so it'll spread those out when it pulls back. I want to see the outer band spread out when it pulls back. The Russell's actually got a little bit of a trade right here where it is, but I can't find my DOMs right now. I don't know why. Where all my DOMs are. There's one, there's another one, there's another one, and there's one more. There it is. Okay, so I ended up missing this Russell trade. It's already gone too far into profit to take the trade. The NQ is given a green arrow over there. Now the green arrow is coming after the purple arrow. The purple arrow didn't give you any higher swing or anything like that. Green arrow, the outer band's pretty tight right there, so it's kind of a questionable green arrow as we're getting away from the weekly trading zone right here. I kind of want to go look at the bigger picture and see what that looks like, and hopefully I'm still connected in the bigger picture. I am not. Okay, well, let me go connect to the bigger picture. And give me just a second here. It disconnected me. When I was messing with all the internet stuff. During the break, up and down the same. Okay, that's what you mean, symmetrical. Yes, they are. That is one thing you get with the fiber optic that I did not get with my T-Mobile. This is running on T-Mobile right now. And I think I'm just going to leave it on T-Mobile for the rest of the day today. Everything's working. And it's actually plugged directly in. So now on the YM, we're going to be looking for a pullback. This is kind of what I want. I want to see it go up a little bit higher, so when it pulls back, the outer bands will spread out just a little bit more. Okay, this is going sideways here. The outer bands are completely flat. It's in a no trade zone. Yes is in a no trade zone, and the Russell's not really giving us anything either. So let's go out here and look at Bitcoin for a minute. It's pretty much doing what we thought it was going to do yesterday. Oops, that's not Bitcoin. Yesterday, it gave us the down close and green arrow on this bar, which is what we were looking for. And now we'll be looking for this bar to continue to move down. All right, it might be a green bar like this last one was right here, the same exact spot. But I'm going to be looking for that to get all the way down here. All right, just get all the way down here. And if we go out one more and we look at what's going on here with, this is ExxonMobil. This is on the 15 range. On the 15 range today, I actually had two stop outs. The one that it normally gives this morning stopped out right there, and then it gave a follow-up one right there that stopped out, and then it gave one right here that's working out right now. Right, that, you know, I guess it would have made up for those stop outs. I guess if you went long right here, your stop out would have been down here, and if you went long right here, your stop out would have been right here. Okay. And so if you went long right here, well, then you just about got break even on the day. I think, I'm not exactly sure if you can do a replay on this and see what those, sorry, this is, I forgot, I'm on a range bar here. You can't do a replay on a range bar. If you look at this on the 30-minute, it pretty much nailed it on the 30-minute this morning. You see, it gave a long trade right here, and it was pretty good from the very beginning. You're looking for, you know, $1 on that. But if you go back to 15, then, well, this is what it's looking like. Let's see. The Russell needs, I didn't get into the Russell when it had, you know, when it had that down close right there. So I don't have a trade with that. If you go here to just 4 screens, we have nothing there, nothing there, nothing here that we can do. And I'm looking for the pullback on the YM. Symmetrical. It's indeed. All right. Does anybody have any questions? Steven, I saw that you found that black button. Sometimes the trees in the forest thing. Rachel, I see you're in here. This afternoon, guys, I'm hosting a webinar at 3 p.m. Target View Trades. All right, if you go here to targetviewtrades.com, click on this button right here to register. All right, Intro to TV Trades, register here. I should put that on there. Click on that to register. Okay, just get in there, fill that out, and get registered. Rachel, that's something you might be interested in if you're listening. I know Ray's really liking it right now. And yeah, so again, that's targetviewtrades.com. That's right here, targetviewtrades.com. Click on that. Right. Maybe that didn't look like a button to you, Steven. Maybe that's what it was. Maybe I'll put register here. That's what I should do. Let me go do that. It'll take a minute. I gotta do it on the browser though. It doesn't look like I have that browser open. All right, so we're still in a no trade zone over here and a no trade zone here. And over here, it looks like we might get that trade on the YM. We might get it on the YM. Hopefully we will. Okay. And it looked like it was going to bring us to what we wanted right away, right there. Look at that. It is. Okay, let's go to the home page. Click on that big button. And we'll change the text on it. More descriptive. There you go. That is now being published. So that will not be a question anymore. Now, if we go over here and I refresh this, there it is, register there. All right. Yeah, so if you're interested and you want to watch that, get in there and you'll learn all about this right here. This stuff. Okay. All right, let's go back here now and we'll look here for a pullback. We don't have a pullback here. We're just getting out of the no trade zone here, but it's still not trending. This green arrow here needs to put in a higher swing. It hasn't done it. Okay. We've got another black arrow over here. That's still not a trade there yet either. It's got to put in well, it doesn't have to put in a lower swing because it hasn't given a green or a blue arrow yet. So it doesn't have to put in a lower swing. But I'd like it if it put in a lower swing. It'd make me happier if it put in a lower swing. But that doesn't mean it's going to. All right. Let's see. Steven. Yeah, I don't know. It's right at the top of the page. It's always been right. Oops. It's always been right at the top of the page. I guess maybe there's a lot of space in here. That's just the way that they kind of make you do it. Yeah, that's the way the GoDaddy kind of. They have stuff up here that I could have used, but I didn't use it, so it's just blank space. But the register here thing. That's the button to press. All right. So that's an interesting number that called me. If anybody's got any questions about anything, just type them in. All right. I'm happy to go over anything else that you may want to. 3 p.m. Eastern time, right, Rachel? 3 p.m. Eastern time. Did it say that? Yeah, that's right here, Eastern time. So it's in a couple hours from now. So we're doing it. I did it last week, and it was a total mess last week. Everything didn't work. It's not like anything did work. Everything didn't work. I couldn't get connected to go to webinar to start the meeting. And then once I finally did get connected, 26 minutes later, it was a different kind of GoToWebinar that I wasn't familiar with. Everything was different about it. And then once I finally got it going, my audio dropped off for the last 10 minutes of it. So it was just a horrible mess. And hopefully everything will go better this time. I'm hopeful that we'll have a successful meeting this time. It kind of stinks because I was all geared up for last time. I will be this time too. But all right, so this green arrow right here is not a valid trade. Okay, it's not a valid trade because this green arrow did not put in a higher swing. Every green or blue arrow has to put in a higher swing. Right? You can't take any other trade in that direction until it does. Okay, so you're just getting the green arrow because it just went completely sideways. It went into the oversold and popped out again. That's why you get another arrow there. Yes, and that is it for all that stuff. Okay. Yeah, I think you'll probably like that. It's really intuitive stuff. You really don't have to do all that much. Just put it on the chart that you want to put it on. If you want to watch it on the NQ, for instance, you can put it on the NQ, and you can do that on a 15 range, the same 15 range. But on this, you're going to want to see shorts and longs. So it'll give you the information here. And on this, if you wanted to filter out situations like this, I'll be getting into all this later, but if you want to filter out situations like that, I have this guy right here to filter out those so you don't get back and forth all the time. You see, it just filtered out all those ones that were just going back and forth. There were some more things that I did. There's more things that I'm going to show you. There's things that I have in the works. So I'll get into all that, when the time comes. But for right now, you can use it on anything. You can use it on the NQ. You can use it on the YM. You can use it on the ES, whatever time frame you want. Would you believe we have a partner that is looking at this on a 200 range chart? A 200 range chart. But this is what it looks like on the 30 minute. If you wanted to do it on the 30 minute, in here, the stop would have been down here on this one. In here, the stop would have been here, and here, the stop would have been up there. But this stuff right here, if you put the bias level on again, it's going to filter out a lot of that, all of that. Yeah, a lot of it. So, yeah, I'll be going over all this stuff later. Okay, all this stuff a little bit later. And right now, still no trades in here. Almost have a trade on the YM. Now the YM has just totally disappointed me today. Right, this did put it in a lower swing. So if you did get into that trade right there, you stayed in it, you finally got a lower swing. All the indices look like they're trying to go down a little bit right here, except the YM. And the reason the YM was disappointing to me today was because when we started the day out, right here, I was fully expecting it to get up to the weekly trading zone up here in a rather quick fashion. And it got about halfway there, and then it stalled out. And if you look at that on the larger time frame, let me do this. If you look at it on a larger time frame, I'll show you. Here it is. On a larger time frame, I was thinking this is what I was using right here this morning, and this is where I thought it should go, up to there, and then fail off of that and come down. But it made it about halfway up there and then came down. The NQ, this is what I was using. This is where I thought it should go. And that also made it halfway up there. At the time, the NQ was down here, and I was saying it's going to get up to the zone, and we got to close above the zone. Once we get above the zone, it should push up. I still think it's probably going to push up if this half-hour candle that we're in right now does not close below the MA1 right here. If it closes above the MA1, then there's still a chance we're going to get up there by the end of the day. But if it closes below the MA1 right here, that's bad news. Okay, it's going to go down. Same thing with this one here on the Russell. I was thinking to get up there. It got halfway up there. It actually hit this level, which was one of the spots that I thought it was going to get to. But it was pretty close to that when we started out this morning. It was like right down here. I was thinking this is where it's going to go, and then it'll probably get up to the zone is what I was thinking. But you see it's pulled back down to the MA1 right there. And I expect if this candle closes above the MA1, it'll get up to the zone. If it does not, it's going to go down to the BBC. Right? And the BBC is also the midpoint right here. There was another thing that I had shown people this morning. There's another point in between here that's the quarter point. Right? When the markets aren't really giving you a lot of follow through, there's a quarter point, and it's right there. Now that is also a Fibonacci level. It's not a quarter point for the Fibonacci level, but I think it's 24%, something like that. But it's also a significant Fibonacci level. And on the ES, this is the quarter point right here on the ES. You see, this was the halfway mark between these two zones, and this is the quarter way between those two zones. And this candle right here, if it closes below the MA1 in 10 minutes, that's going to be pretty bearish. The soybeans I haven't really looked at, but we're on the end contract on soybeans and the YM. The YM is just sad. I'm hoping it's going to close above everything here. When the black step line gets below the MA1 like that, it comes back and bounces off the ribbon. And usually when it bounces off the ribbon, it's going to make a bounce back up to the prior swing high. Okay, so that's what we'll look for here. We'll look for it to get up to here. And then if it does get enough juice to get up to there, it might get up to here. Now it's a really slow news week, and that's not helping us at all. I missed the YM trade over here. It's a really slow news week. So you blow along on the line, but it gave me an alert, it popped in my headset and everything, and I still didn't get it. Yeah, but if you go in here, we have our own news spot now. If you go here to mytradingiq.com and you go to more and economic calendar, this gives a lot of information. I only showed the euro in the US news, but it gives a lot of things in here that you don't normally see on the news feeds. Like the used car prices month over month and year over year. Those are coming out today. You don't normally see that. The 42-day bill auction, you don't normally see that. Trade purchases 0 to 1 years. It's $80 million. That's what they're expecting. I guess that's what they did. Doesn't seem significant compared to the billions that they normally give away. And this afternoon, well, a little while ago, we had the three-year note auction. It's 4.65 3-year note auction. I don't know what that looks like on a. There it is. I was just gonna say. I wonder what that looks like on a chart. See what it was like. You know, when the economy was good before Biden came in. Yeah, the interest rates, they weren't paying anything in interest back then. Interesting. Okay. So that again is at mytradingiq.com. You go to more and economic calendar right there. I think I might take the fix off and put the fix in the more part and switch that around so you can see the calendar up here. All right, so we're back in here. We did get the higher swing here on this, and this is actually kind of doing what I wanted to do now. The Russell is also doing what you want it to do when it comes to a trade setup, but it's running opposite the YM right now, which is actually no good, but it's probably going to give us a short here, 85.7 down to, is that right? 85.7 down to 84.9 is what you're going to be selling there. Am I connected? Doesn't seem like my DOMs are even working right now. There, no. Maybe I need to reconnect after all that disconnecting and reconnecting that I've been doing. There they go. All right, so we've got a higher of 85.9, so you'd be selling 85.1 now on the Russell. I'd really rather not sell anything on the Russell because it seems like everything else is starting to move up. I'd rather have the Russell go up with it. So what I was hoping for here on the YM, it could be happening. Could be happening. We want to see it up to this weekly trading zone up here. We now have a higher swing over here on the NQ that we're looking for. Okay. Yeah. All right, so I had an order waiting there on the Russell, and it's not triggered yet. 86.1 down to 85.3. On the YM, we want that to pull back down, test the ribbon, and over here on the yes, we want that to pull back down and test the ribbon there too. On the NQ, same thing would be good over there. And we almost have a trade here on the NQ. Okay, there was a question last week about if there's any significance if you go from like a little white arrow to a big green arrow to a little white arrow to a blue arrow to whatever. It just means that the market's gone sideways and it keeps going in and out of the oversold or the overbought, depending on what direction you're trading in. It really just means the market's going sideways. You know, if you're not in a trade and you see that's happened, you might just want to skip it and wait till it really creates a good trend. All right, so we got the black arrow over here. Now, I really didn't want to get a black arrow in this because it's too close to the swing high to take that. All right. And on the YM, we want that to pull back down and test the ribbon, which it hasn't done. And on the Russell, we want that to drop off of the ribbon, which it hasn't done also. Okay. All right, so the black arrow did put in a higher swing. We ended up with a black arrow over here on the YM too, which is really no good. You see all three of these indices moving up, and the Russell's trying to give us a short right here. I'm sus. It's 1328. I don't know that we're going to take a trade here. I do still have the order waiting over there on the Russell, but I think I'm going to take it off. It is waiting in the same place, the right place. This is how you would set that up, by the way. Because these are 7-tick range bars, you want to sell 8 ticks below the top of the bar. That's what this is right here. 8 ticks below the top of the bar. Okay. So if it closed down at this level right here, it's going to trigger me in. This level right here is where the bottom of the bar would be. Given the information that you have right now, the bottom of the bar is going to be right here at 85.4. All right. So if it does close down, it's going to trigger me in. It's going to close here at 85.4 and trigger me in right here. Probably not there because this, with 17 contracts on it, always slips me a couple of ticks. 1 or 2 anyway. And it's now 129. So I don't know that I'm going to actually take the trade. It might trigger right now. You just see that little bump right there in volume on all of them. Yeah, not really volume. It might have been volume. but everything just seems to bump in price a little bit. All right. Well, you know what? For right now, I'm just going to cancel that order. I think we're going to have to wrap it up. We are now 10 seconds away from hitting my end of time. Let me go in here and see, did anybody ask any questions in the YouTube? I don't see any questions over there on YouTube, so we're good with that. If you have not taken a free trial with us, go here to mytradingiq.com, sign for the free trial right here. All right, with the free trial, there is no credit card required. You get access to all the indicators. Oops, you get access to all the indicators when you sign up for the free trial. Okay, so go there and take advantage of that. At 3 o'clock, targetviewtrades.com, I'm going to be doing a webinar about this stuff over here. This stuff right here. Targetviewtrades.com stuff. I'm saying it's that. So I'm doing a webinar about this and going into a lot more detail about all this stuff. If you want to take part in that, you need to go here to targetviewtrades.com and register right here. Click that button. I guess it's not really 3D looking there either, is it? See if I can fix that too. Anyway, that's it, guys. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
Excellent.
Recap of the morning session.
Today it took, I got to tell you this too. Today it took 7 minutes and 2 trades to get to $2,550. And yesterday I had a mistake in there. Yesterday it took 6 minutes and 1 trade to get to $1,700. And today it took 7 minutes and 2 trades to get to $2,550. I had a mistake in my spreadsheet yesterday, but I fixed it today.
Good job.
Thank you. Thank you.
All right, guys, we'll pick up where we left off with the Russell. And we've got this zone overhead, 2092/93, and then there's the highest weekly zone for the Russell this week. Step line has crossed blue and climbing. So it looks like before we see this zone, probably get a retracement back to the VVC, and then potentially a leg that takes us higher. But it's really all on the back of this right here, which we talked about at the beginning of the broadcast. This area here. You know, it's hard to dial in the exact point because it's a daily chart, but where the bearish cross took place, where the red line out below the green line, basically there, 52.31. We're almost there. The high so far is 52.26. Now, whenever you have a bearish cross that leads to an extended move, the first time price revisits that area, it's almost always good resistance. Every time? No. But more often than not. Now, one of two things can then happen. Price can back up, make another run at it, and get through it. Then you're going to run into potential resistance off the high of April 10th, and then the high of April 4th, and then the all-time historic high of April 1st. The other thing that could happen is we hit that resistance and it flips the whole market. This whole thing becomes a head fake. You got to embrace all possibilities and trade what's in front of you. On the NQ, it's about as flat as it gets. Here's where we opened last night. Came down to the BVC, the pullback held and held and held. And then we finally got a little bump. Took us up to the target. Came back to the BVC. And we made a run to the zone. And as happens 70% of the time when price encounters a zone, we get consolidation now for 1, 2, working on 3 hours. Crude oil. Here's where we opened last night. And we ran right up to the zone overhead. Plenty of room to get your goal for the day. When the market finds resistance, now yesterday, where was resistance? At the zone. And look at all that consolidation. And we came down, came back up, still resistance at the zone. Now these highs right here, as you can see, these highs, this high right here. See the bearish cross? Red line gets below the green line. Now the fact that we have that coming up on the daily chart, that's an even bigger deal. Okay, the larger the time frame, the more important the information. So we hit the zone, come down to the zone, consolidate at this zone, and we get a drop almost to the target, but plenty of room to get your goal for the day. This candle opened at 78.50 and dropped to 78.26, so $240 per contract traded in that one candle. Okay, and price pulls up to the zone and the BVC, which we expect to be resistance, and it was, and it sent us back down, this time all the way to the short target. We consolidated there, and then we dropped to the zone below. Support sent us up to resistance at red and falling. Resistance set us back down to support at the zone. Support sent us looking for resistance. We overcame the BVC. We overcame this zone. Now this is the slice. When a slice runs out of steam, it will typically retrace to the zone it sliced through and continue in the direction of the slice. That's exactly what happened. Now, this high today in crude, okay, was defined way back on Friday. Okay. The price attempted to get above the BVC and failed. And where are we now? Consolidating at a weekly zone. Gold. Here's where we opened. Pull back to the BVC. Made a run, but we could not take out that high in yesterday. Right there. That's a sign of weakness. That sends us back below the BVC. We get support at the zone, which bounces us up to the BVC resistance. And then that takes us back to the zone, again where we consolidate, and then drop all the way to the short target. That support, which was defined yesterday, there, sends us back up to the zone. We spike it. Where do we spike it to? Bearish cross. And then we consolidate at the zone. Get below the zone. Don't make it back to the short target. Trying to overcome the BVC right now. So that creates an opportunity to trade up to the zone, but you got to keep in mind that this high right here, 2327.7, is potential resistance. So you might want to be careful on that. Okay, be better that price failed because you've already got red and falling. So 2322 to 2321, bang, goal for the day. That little area there. Silver. Here's where we opened. When blue and climbing gets directly above price, then it becomes potential resistance because it's often on its way to turning into red and falling, which is bearish. So that took us down to the zone, support. Support bounced us back up to the BVC, resistance, sent us back to the zone, back to the BVC, back to the zone. Red and falling turns to blue and climbing, and we take out the early session high by how much? A little bit. And what do we think about a little bit? We're always very suspicious. Okay? And good reason to be, because back we go to the zone. Consolidation. But support nonetheless, which bounces up to red and falling. We can overcome red and falling in 27.63 to 27.65. Only takes 2 pennies in silver to get you going for the day. And last but not least, the euro. Here's where we open, came down to the zone, found support. Red and falling turned to blue and climbing. We got a leg, we got a retracement, and then we got a leg. Right up to the target. And then resistance, defined yesterday, sent us below the BBC to the zone where we are currently consolidating sideways. Remember, 70% of the time consolidation, 20% of the time rejection. This is a huge wing candle all the way up. But this is Friday, so these weren't the zones on Friday. This is Tuesday, this is Monday, but I'm just showing you what rejection looks like. I already showed you what the slice looks like. That brings us back to our daily chart. As we await whatever happens or doesn't happen as we hit that bearish cross. Real close. I would keep an eye on that, because that will probably dictate whatever direction. If we overcome that, and the other indices will possibly rally. If this does become solid resistance, the other indices will probably head south. Now, if we do head south, there's lots of areas of support. That 62% fib extension. Right here, you've got a bunch. You've got the step line, the BBC, blue and climbing. I mean, that is a cluster of support. So, embrace all possibilities. Trade what's in front of you. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders will fail because they don't have a teacher. When you become a passport holder, you have a teacher. 2 hours every trading day. From 7:15 to 9:30 a.m. Eastern. A little over 2 hours. It's an interactive environment. It's not just someone giving you a lecture. It's someone putting on, taking off trades, explaining every move they make, every trade they take, while you trade along in your demo account to qualify to go live and ask every question you can possibly think of. And after about 2 weeks, you'll run out of questions, because the strategy is just drop dead simple. As a passport holder, you not only get 2 hours of live training every trading day, but you get private one-on-one mentoring at no additional cost. The strategy that you learn, the indicators that you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF. Price flow is the same as I just showed you across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. Also, as a passport holder, you get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and you're able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. Really is everything a trader needs, all under one roof, one low price. MyTradingIQ.com. All right, good word for the day. Yesterday we started a new topic. You are being pruned. So let's go with, that doesn't mean somebody's throwing prunes at your house. Psalm 119:71. My suffering was good for me. That doesn't sound right, does it? God uses problems, pressures, and people to prune you for greater fruitfulness. Are you aware of Him using any of these three things in your life today? God can use all situations in your life to help you grow if you'll just have the right attitude. He'll use a major frustration, a financial setback, a sudden sickness, a broken marriage, a rebellious child, or even the death of a loved one to get your attention. Obviously, you say, but it hurts so much. Yeah, pruning is painful. Sometimes a gardener will prune a tree until it looks like a totem pole or a giant toothpick. It's not a pretty sight, but the pruning process is positive. God is not mad at you. Romans 8:1 tells us, there is therefore now no condemnation to those who are in Christ Jesus. God does not punish His genuine children. Jesus took your punishment on the cross. God's pruning is for your best, for more fruitfulness in your life. Can God's pruning fail to produce? Sure, if you don't cooperate. How does God produce love, joy, peace, patience, kindness, goodness, faithfulness, gentleness, and self-control in your life, as we read about in Galatians 5? He produces these qualities by allowing you to face situations and people with exactly the opposite qualities. He teaches you to love by putting you around difficult people. He teaches you patience by letting things frustrate you. Now you say, how can I cooperate with God? The Bible tells us in 1 Thessalonians 5:16, always be joyful, never stop praying, be thankful in all circumstances, for this is God's will for you who belong to Christ Jesus. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you, His mercy, and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.